of knowledge to take home, and let's wait for that. And so, without further ado, let me start welcoming the panelists. Please welcome one by one. The first panelist is Mr. Ammar Ahmed. He is a passionate and dependable Islamic finance professional. Ammar has played a key role in the team under various capacities since joining Dar Al Sharia in 2008. Currently, as a Chief Executive Officer, he oversees client relationships for turnkey projects, which includes developing strategy, setting up Sharia governance framework, product development and implementation. He also advised from Sharia compliance perspective large capital market transactions, corporate restructuring, IPOs, private equity investments, and screening for various asset classes. Prior to joining Dar Al Sharia, he was associated with hedge fund industry, providing services to leading fund managers and administrators, and has an experience in working under various jurisdictions across the world. Ammar is a member of accounting and auditing organization for Islamic financial institutions and is a certified Sharia advisor and auditor, in addition to completing his MBA and BCom honors. Ladies and gentlemen, please put your hands together to welcome Mr. Ammar Ahmed. Thank you. And the next, Dr. Areeba Khan. Dr. Areeba Khan is a highly accomplished specialist in finance, in Islamic finance and banking, with a proven track record of success in the field, with a doctorate from Areeba Muslim University in India. Areeba's areas of expertise include Islamic finance, Islamic equity indices, sukuks, Sharia law, corporate governance, and portfolio management. Areeba has extensive experience in the core sectors of finance, banking, and real estate, having previously worked as assistant manager operations at Axis Bank and as a lecturer at Areeba Muslim University. Her research interest lies in portfolio management, equity indices, Islamic finance, Islamic law, and corporate law. Currently, Areeba is the founder and CEO of Taqwa Invest, where she applies her expertise in Islamic finance and portfolio management to provide innovative and ethical investment solutions. Areeba's commitment to excellence, attention to detail, and dedication to ethical principles make her a sought-after expert in her field. Please put your hands to welcome Dr. Areeba Khan. And we have the third panelist, again an expert in the field, Mr. Farhaan Iqbal. I was waiting for you. Farhaan is a private client manager at Wahed and serves as a relationship manager for Wahed's client internationally. Farhaan joined Wahed in 2022 and was originally part of the UK team where he looked after individual and corporate clients across the UK. Prior to Wahed, Farhaan was at JP Morgan Private Bank in London, where he qualified as a financial advisor and was part of a team advising families, endowments, and charities on their investment portfolios. Farhaan has an ijaz in Islamic finance and studied economics at the University of Nottingham. Please put your hands to welcome Farhaan. We have one more chair vacant here, and of course this is going to be a panel discussion and we need a moderator, right? We need a moderator or not? We need. And that is going to be looked after by Rashita. Rashita is actually part of the Middlesex University as well as part of Money Matters Forum. So she's our bridge. Rashita Puthiya is a senior lecturer in accounting and finance at Middlesex University, Dubai. She is a chartered accountant from the Institute of Chartered Accountants of India and is a senior fellow of Higher Education Academy, UK. She has been in the teaching field over 12 years. Her academic and research interests include IFRS, valuation, and sustainability reporting. Please put your hands to welcome Rashita. Now the stage is yours.
I have two questions for the audience, and that's for you to have a look at the answer, because when we were brainstorming this panel discussion, Mr. Ammar asked me, how much do you think audience know about this topic? All right, Ammar, this is an answer for that. So, audience, if you could take your mobile phones out, in classrooms you can. If you type www.meti.com, would you prefer QR codes?
Yeah.
Yeah, okay. Yeah, my students like QR codes. So we see the word, so the bigger the word, it means more number of people have used that. That's how this the word cloud works. So, great, I'm really impressed. You know more than me. We see the word Sharia, we see the word halal, and then we see, oh, no interest. We see profit sharing, and then we see, oh, did you see this, panelist? What is this word? Window dressing. Ah, interesting. Yeah, that's for you. And of course, all Arabic words, we have no clue what those means are. That's it. I see the word ethical. Brilliant. Let's see how the panelist is going to answer these questions for you. So we will put them on treasure. All right. Great. I'm going to now play a second question for you. And that's it. Because our topic is financial inclusion. My last question for you is, rank the following in the order of importance on the purpose of financial inclusion. In simple terms, what does financial inclusion mean to you in the order of importance? So there are 5 parameters. Feel free to just think what you think should be the most important when you hear the word financial inclusion. So the same quote, you should be able to see the question on your mobile phone. Can you see it on your mobile phone? Yeah. Interestingly, this is something different from what I expected. Okay. It's totally different from what we expected. You see that the audience has rated access to economically weaker as their #1 definition of financial inclusion. Interestingly, at #2 comes financial literacy. At #3, our audience feels it should be anytime, anywhere access. And we have 2 tech-savvy youngsters who are here who will take that. At #4, they think it's only about wider financial product range. Surprisingly, the access to faith-based customers is only at #5. I think this is an interesting thought for our panelists out here. Thank you very much, audience, for this. With this in mind, let's see how our panelist is going to take all these questions, and we keep this in mind again and again. All right. Okay, with that in mind. So to the panelists, we've all heard, I belong to the audience side. I'm not in your league. We've all heard about conventional finance, right? So you put deposits, we get interest. If I need a loan, I go to the bank. The banker gives me a loan. I repay with principal and interest. If I default, then I face legal consequences. That's it. Now, let's first get into the basics of Islamic finance. So my understanding of Islamic finance, what's differentiating from conventional finance is is the way the contracts are structured between the two parties. So my first question is naturally to the banker out here. It is to you, Ammar. Ammar, could you demystify the term for the audience? What is a Sharia compliant contract?
Assalamu alaikum, good afternoon. Good evening, everyone. So, very interesting poem, by the way. I think if you ask me, frankly, a majority of financial intermediation in the world today is Sharia compliant. Western, Eastern, whatever you go. Why do I say this? See, financial intermediation is nothing but moving capital. Moving capital from, as we define in economics, probably, professor here, moving capital from capital rich to capital scarce. This is financial intermediation, right? So in this realm of financial intermediation, globally if you see, even today, a significant majority, incomparable majority of financial intermediation aligns with the principle of Sharia. Why do I say this? I say this because if you look at the capital markets, so capital markets where capital moves has two components. One is your traditional banks, which borrow and lend money, or if it's an Islamic bank, they have Sharia compliant means of moving the money. Then you have the other financial markets which we call equity markets. All the banks put together in the world cannot compete on stock exchange. The largest bank, the Bank of China or Bank of New York Mellon, is what is their size? 5 trillion, I think, of dollars. Top 2-3 companies of the world. So all the companies in the world, like you have stock markets, Tesla, Apple, Saudi Aramco, they are also in the business of moving capital, right? So when shareholder is providing capital to the entrepreneur, they are actually moving capital. They are providing the capital. So I always say this, that even today in this world, majority of the capital movement is Sharia compliant. However, because we understand this market more from a banking perspective, a risk-sharing based approach, or a trader-like approach, and whatever return they earn, they will then share it with their depositors and the customers.
Okay.
Did that help? Or maybe I can take questions on that.
Sure. So that sounds, this is the first time I'm hearing such a, what you call a very ideal definition of Islamic banks. Banks acting like entrepreneurs doing business. But the reality, when I look into, I just look into financial statements. We still have some doubts. And one is, the fundamental concept is, we have interest. You have interest. But when I read banks' financial statements, wherever there is a word interest rate in a conventional bank's financial statement, I see the word profit rates. So my next question back to you, because I can't leave you like that, is, if you're an entrepreneur, you will know the profits only ex post, as in after you do the business, am I right? But banks sometimes kind of announce an expected profit rate well in advance. For the purpose of our audience, one more demystifying question to you. What is the difference between an interest rate, which we all know, and a profit rate that we see on the face of all the banking websites?
So, first answer is, before my answer. See, Islamic banking is not charity. So if there's something corner of your mind, you think that, these guys are there to help me when I'm suffering. No? For example, you're a businessman here, I believe, right? You run a grocery. If someone's hungry on the street, will you give your entire grocery to him? You say, I have my kids to feed. the rents to pay. Yes or no? So Islamic Bank is a commercial enterprise. That's the first thing that we have to clear the conception in our mind. So the shareholders came together to earn money. The depositors, when they gave capital or deposited their amounts in their bank accounts, it's not for charity. They want some return out of that. To your question. So when profit rate, probably you see in both contexts. One context is I as a customer is going to an Islamic bank and giving my capital to them. That's one context. The other is I'm a customer. I want to go and buy a Tesla, right? A car. So how does it count for me as a profit rate? So your point is right. When we invite the customers to deposit with us, as a customer, I say, okay, I will give you my capital, but what is the expectation that my capital will earn? I have two options as a bank. Either I say, I don't know, like equities, I don't know. Or they say, look at my past records. Probably Tesla has given a dividend, stock has given a dividend of so much value. Or I can tell him, as a banker, as someone who is doing this, I think this year we can make 4.5%. But this is not a promise because I am an Islamic bank. I don't assure you of that. You put the capital, this is an expectation I can provide. This is on the depositor side. On the financing side, what is my profit rate? So Islamic Bank comes to you in two, you can say, modes of contracts. One is, it will either do a sale and purchase with you, or it will invest and participate with you. With retail customers, no investment, because if I want to do a retail banking, what do I want? Either I want a home, or a car, or a personal finance, or a car. So retail, all banks, conventional Islamic have only 4 products, right? So when I want to take that product, depending on the contract that they adopt. So let me take an example of vehicle finance, right? So when I want to take vehicle finance from a bank, like a traditional bank, they give you a loan and say until you pay back the loan amount will accrue interest. So you initially take the loan for 4 years, 48 months. You prepay with a penalty or you continue paying. If you don't pay, there is a compounding effect that happens on your outstanding debt. Right? Of course, we said we cannot do intermediation on loan. So how do we do that? So Islamic banks tend to do this in 2 modes. Either they buy the car and lease it to you. So until you are driving the car, you pay lease rentals to the bank. Or they buy the car and sell it to you. So when they buy it and sell it to you, of course it should be some profit. And you should know that profit. So it's similar to me buying a bottle of water from the supplier, keeping it in my grocery and selling it at 1 dirham. So in that 1 dirham there is a profit element from the entrepreneur, right? So one is disclosed and one is undisclosed. So when you come to Islamic Bank, they will disclose this profit to you. That's why you will see the profit. I mean, I don't want to bore you with details, but there is a test. You're all, I'm sure, can read.
If you compare conventional investing and Sharia compliant or halal investing, put simply, the difference is, if I or we as itself partakes in that activity. So for example, I cannot drink alcohol. With diversified portfolios, that's when you can actually construct portfolios. But if you actually strip all of that back, you go down to what am I actually investing in? When I invest into a Sharia compliant stock, you're investing in a business which itself is halal. It avoids impermissible activity. And so even you mentioned interest, when you compare it to investing versus interest. When you give somebody a loan, whether it's a bank or an individual or a business, fundamentally you're not really worried about how well that business or that individual does in whatever their venture is, as long as you get repaid, as long as they don't default and completely go bankrupt. You're fine. You're clipping your interest and you take the money. Whereas with investing, it's like Ammar mentioned earlier, it's about sharing in that risk and reward. So you really want the business to do well because you do well. And if the business doesn't do well, then your return suffers. And so there's an alignment of interest there as well.
So that you mentioned about risk. So for the benefit of an audience, how risky is it, or how less risky is it, going in for an Islamic product vis-a-vis a conventional product?
I would say there isn't really, from an investment perspective, there isn't really much difference purely from a risk perspective. These days, there's a huge availability out there of Sharia compliant or halal investment opportunities. And it isn't like, if I'm investing into a Sharia compliant portfolio, I have to, throw out 90% of all of, the companies that are on the stock market. You can still have, Sharia compliant portfolios which are diversified, meaning, not all of your eggs are in one basket. You have investments across different countries, different sectors, and for example, with Wahed portfolios, you have 300-400 different companies, within each portfolio. So it's really, yes, there is risk involved, but you don't need to expose yourself to undue risk. There are ways to mitigate risk at the same time.
Okay, so that's interesting. There are ways to mitigate, and I'll come back onto the ways to mitigate risk. Let's move on to Dr. Areeba. I don't know how many of you have actually gone through the websites of this halal investing. One thing that really catches my attention is the photographs of a lot of scholars in all the platforms. I don't know if you've noticed that. So I often wonder, and that's my question to you, is Islamic finance so complex? He made it very light, what I thought was complex. But then seeing these scholars, is Islamic investing so complex that we need scholars to certify what is right and wrong? And one more interlinking question on that is, what do scholars look for when they say, this is Sharia compliant and this is not Sharia compliant? So, over to you. Assalamu alaikum, everybody.
Assalamu alaikum. So this is a very interesting question. Yes, we do see pictures of Sharia scholars, like we both can agree on that. So no, Islamic finance is not that complex, honestly, because we do need Sharia scholars. I'm a doctorate in Islamic finance, so I cannot certify a product and call it like Sharia compliant and sell it to other banking or financial institutions, because I'm not a scholar. I am just a doctorate in Islamic finance. Sharia scholars can actually certify and tell why this product is Sharia compliant. They do the deep analysis. We also can do it, but those guys are experts in the Sharia part. We are just experts in the financial part. So that is why Sharia scholars, you can see pictures on like almost all the financial institutions' website that these are the Sharia scholars and these are the people who certify us. Even with, I think so Halal has a certificate uploaded on the Wahid's website as well. So yes, we do need Sharia scholars to certify and tell us that this product is Sharia compliant. So to answer your next question, like I can tell you in the case of financial products like stocks, equities, or virtual assets. So in that case, Sharia scholars look for two things. One, they want to make sure that the business is halal. So by this I mean that the business is not making revenue from non-halal activities. Like Farhaan mentioned about alcohol gambling, so businesses should not be making money from these. The second thing they look for is financial screening, wherein we have to make sure that the ratios, which is the debt equity ratio, cash compliance ratio, they all fall under the threshold limit. These threshold limits have been given to us by AOV, which is the governing body of Islamic finance.
Okay, that's very succinct explanation.
I'm sorry, I'm like too much into the exact academics because I'm coming from that background.
Yes, over to you. Ammar has a point over there.
Yeah, I think, if you look at businesses, why do you need an auditor to audit your financial statements? Because this is an independent assessment. There's an inherent conflict of interest with the entrepreneur and the stakeholder. So you want a third eye, which is outsider, to come and look whether this guy is actually, aligning with the governance requirements. So you have IFRS, reporting requirements, valuation, accounts, better. So similarly, when Islamic finance came first, so the regulators, they said, how do we ensure that? Because the entrepreneur's inherent interest is to make money. So how do we put a sort of a rein on them? So they are required by regulation, depending on which regime you are in. So every regime from the country or within the country, for example, in UAE you have CBUAE regime, which licenses banks and finance companies. You have ESCA, which licenses investment products. You have commercial companies law, where you have LLCs which are established. So everyone, if you say I want to run a business with the Sharia compliant, you invite some regulations. So that regulation said, or that regulation says, that to control, have an oversight body, which can actually sort of, act like a ring, like a monitor. Nothing more than that. It doesn't mean that if you are an entrepreneur, you know Sharia, you can judge. If, a CFO in a company is working, he knows accounts better than probably the auditor.
Yeah.
Right? But you want a third eye. So that's where the Sharia board roles come in. So it's not because of the complexity, it's because of the, you can say the second and the third line of defense, as we call it, probably if you are familiar with those terms in the industry.
Thanks, Ammar. He's talked about auditor, and then he might be being an accountant. I understand that. Okay, that's a nice way of putting it. An auditor, the third eye for the investing Sharia compliance. Brilliant. So I think that covers a good overview on the basics of what an Islamic banking does, what is meant by Sharia, avoiding what is not permissible in the religion, and what is the role of scholars. We now move into financial inclusion, and I start with Areeba. I was looking at your platform, Dr. Areeba. So Areeba is a co-founder of Taqwa Invest. It's a platform where, like you have an app, like you have Robinhood. Yeah, I think students understand Robinhood. I don't know about the older ones out here. So like you can just click on your app and buy stocks. Very, very interesting. She has a very pocket-friendly app. I note that investors can start with a small amount of investment. It's a subscription-based revenue model. As a co-founder, when you were designing this platform, what were your thoughts on financial inclusion? And in particular, you being a woman, I want to know, as a second question, do you think that more women are going to be onboarded onto this platform? So, your thoughts on financial inclusion?
Sure. So when we were designing this platform, so I actually completed my doctorate at that time only. And I was discussing with Farhaan, who is the co-founder of the business, that we are from India, and we know there aren't any platforms over there through which you can invest purely in Islamic products. So we knew the gap over there. And then being a doctorate, I did market research as well. For 5 years, I was just working on Islamic equities in India. And I knew exactly what the audience want. I knew exactly why are they not investing a higher sum abroad or through other platforms which are available globally. So that is how we came up with this idea. And we wanted people to just join the platform and test this code which is always there and which we claim that Islamic markets perform slightly better than conventional counterparts during the crisis period. We wanted people to test this out. And for testing purposes, nobody invests like thousands of dollars. They invest a little amount to check how the platform performs or how Islamic stocks perform. So that is why we came up with a pocket-friendly platform. We wanted people to come in. And obviously, when we started doing more research, so we wanted the youngsters to come in. I would like to tell you an incident. I was actually at the expo, and I was coming in that bus which used to take from the car park to the expo, and there were like a few children sitting just behind me, 15 to 16, maybe 10 to 15, and they were discussing about stocks, Tesla. I was surprised. I was like, wow, people are changing. They're thinking about investments because at that age, I'm sure I didn't think about all of this. We were busy like playing and watching TV. So the things are changing and we want people to start investing with us. That is why we built a pocket-friendly platform. Then obviously being a woman-led platform, because both the co-founders are women, me, myself and Farah. So we definitely wanted to target the women because we know this is the unbanked population. Till today it is the unbanked population. And we know women spend wisely as compared to men. So definitely we wanted them to join our platform and invest wisely with us rather than keeping the money at home. So definitely our target was women investors also, and that is why we had a special pack for the ladies out here, which we call the woman. I forgot the name. I'm so sorry. So we have a special pack, and in that pack we are giving the premium services to the ladies at a very minimal cost. So we are building that, and that will be launched inshallah by next week.
That's very interesting to see, you know, your idea about equities and having women onboarded onto investing in equities. It's a wait and watch to see whether the gold business goes down, you know, as a result of these kind of platforms. So yeah, that's a wait and watch for those who are owning gold shops out here. My question is, of course, to Farhaan, who is on a similar, you know, business. Apart from equities, you know, our audience would love to know from, again, inclusion in terms of product range. Okay. What are the range of halal investment products available? Is it just going to be stocks? Or are there options for us to put our hands into other things, you know, through this, again, the Sharia compliant, but other products? We can't do derivative, we can't do a lot of things. So could you just enlighten our audience on the range of products that they can think about it? They can go home and then they can, I mean, not just real estates, but how do you go about doing it through your platform? Go ahead.
Sure, of course. So I think when I look across, not even just Wahid, but the entire industry, when I see the availability of products out there now, it's really exciting. Like when I started investing, it was very, very limited. But I think the industry as a whole has, you know, come on leaps and bounds. Within Wahid specifically, our offering is a managed portfolio service, meaning, you know, rather than just providing clients with a list of, you know, here's all of the Sharia compliant, you know, companies for you to go invest in now, you know, go and choose. Instead of that, it is managed, meaning you just tell us what level of risk you're comfortable, you know, taking with your investments, and we will manage the portfolio on your behalf. So we will rebalance it, we will make changes periodically, etc., etc. Because, you know, you recognize that everybody is busy, everybody has their own lives. You know, whether you're you know, a lecturer, a homemaker, you work in finance or not. You know, people, even if you work in investing, often people don't have time to dedicate their own personal portfolios. So the Wahid offering is it's a managed platform, and within the portfolios, it's not just stocks. You have you have real estate, you have gold, you have sukuk, which is a lower risk investment, all packaged in different proportions based on the risk profile. So, you know, more aggressive. If you're somebody who wants a higher return and you don't mind taking a bit more risk, then you'll have more stocks. If you want to be a bit more conservative, you will have less stocks and more other asset classes. So that, you know, when Wahid was launched, that was always the core offering, and we call this, you know, this is public markets, right? So it's liquid, meaning you can buy and sell, take your money out at any point in time. We launched in 2017 with this offering. Then in 2022, Q1, we launched a venture capital arm. So actually allowing Muslims to invest into Sharia compliant private businesses. So on one side, funding Muslim entrepreneurs and giving them an avenue of capital without having to go to a bank for taking an interest-based loan, actually getting Sharia compliant funding. And then on the other side, for investors who understand startups, who want to invest in startups. You know, everybody wants to invest in, you know, Uber before it was listed, in Facebook before it was listed in the stock market. This is essentially an opportunity to do that. So since 2022, we've fundraised for 15 or 16 companies. private companies, in the UK, a couple in UAE, Saudi, Kuwait, Pakistan. So it's really diversified. So that's one, another offering. And just last month, we launched private real estate as well. So everybody wants to have own a property, have a property portfolio. But if you want to be conscious about your faith, you don't want to take debt to buy property. How can you build up a portfolio without because this requires huge amounts of capital. In the UK, you need at least a few £1 million if you really want a property portfolio, or at least a few 100,000 if you want at least one property. And I'm sure it's the same story here in Dubai. So with the real estate platform, it's essentially crowdfunding for properties. So we will source properties that we think are good enough that are generating rental yield, listed on the platform, and then it's open for a limited time, and then investors can choose to invest in the property from as little as £100. So you can own a portion of a property, and whatever portion you own, you receive that corresponding portion of rental distribution as well. So it's really quite varied. So the liquid side is offered here now locally in the UAE as well. On the startup and the real estate side, it's offered through our UK entity, which is separately licensed by the FCA in the UK, but it's still available to investors in the UAE as well.
Oh, okay. That's very interesting from a financial inclusion. Areeba talked about pocket friendly, and with $100 we can start, Areeba? $50. $50, okay. So that's really financial inclusion. Anybody with $50 can go ahead and invest. What I liked about yours is that, the venture capital is a very interesting idea. I have a lot of people who come and say, I want to start a business, but I don't want to borrow from a bank. So this is an interesting idea that you bring these two people together, people who want to start a new business. So you fund them through a group of investors who would like to put their money and try out to be the next Tesla or the Uber. So that's fantastic. On financial inclusion, Ammar, on corporate lending, I know your questions are really put a little tough. So when you look at conventional finance, Ammar, you want anything, banker will give you a loan. That's the beauty of a traditional bank, So my question to you is, when you talked about Islamic finance, do you think Islamic finance will be able to offer this wide range of, the offerings that conventional finance have been able to offer? Because only if we reach that scale can we truly say, don't you think, that there's financial inclusion?
See, financial inclusion, in my personal opinion, means have different meanings for different people. So one is, if you look at from a personal side, what is financial inclusion to me? Vis-a-vis what is financial inclusion to someone making 3,000 dirhams a month and living in UAE? And so how do you satisfy that? That's a different part of the financial inclusion discussion. What you have asked is more from a range of products. So how Islamic banks can satisfy. So what we say is, see, even if you go to a conventional bank, although you have made a very broad-based statement that they do everything, they don't do everything. So they don't finance a new company. You try opening a bank account with a new LLC license, you cannot open that. Conventional Islamic. They don't allow you to open LC unless you have some track record for that. So that's more from a risk perspective. So from a solution perspective, inclusion from a solution perspective, if we can take that question that way. So over a period of time, when Islamic banks started in the under the commercial regime, 1975-76, the products were few. So they could probably do asset finance, they could help you buy some machinery or a car or trade goods. However, over a period of time now, if you go and look at any Islamic bank, their product suite, what they offer. So you can pretty much comparable to a conventional institution. They will satisfy all your requirements as a business or as an individual. The means how they do it slightly differs. However, For example, as a business person, what do you need? You need a term finance if you want to grow. You need trade finance for capital inventory management, receivable management, cash management. You need remittance services. You need checkbook services. You need short-term overdraft type of a credit line that you can use, right? These are some of the broad. And if you are more sort of sophisticated, you want some hedging products that you bought imported goods from Europe. In Europe, you have to make a payment after 90 days usance. How do you make that payment? Can Islamic Bank give you that hedge? So now, if you look at an Islamic Bank's portfolio or Islamic Bank's product portfolio, you will see that they are at par with convention in terms of helping you, providing the solutions. And this is both true for retail as well as the corporate. That's why you see in countries where Islamic banks are now, we call in banking terms as DSIB, domestic systemically important bank. So central bank designates this term to a bank in a country. So in almost all major jurisdictions like UAE, Bahrain, Oman, Saudi Arabia, Malaysia, Indonesia, Jordan, all these established Islamic market jurisdictions, you have Islamic banks which are DSIBs, domestic systemically important banks. The largest Islamic bank now, or actually bank, is about, I think, $1 trillion dirhams. So you can see why they become 1 trillion, because they offer services, they offer solutions to all categories or all aspects of what a business, a corporate requires for their day-to-day needs.
Now that's nice to know in terms of, now that you've mentioned solutions, I just have an add-on question for you. You said help, that you use the word helping. So it's on social responsibility. Now I'm looking at financial inclusion from a social responsibility perspective. So we had rains a few days ago, and we are still in this, a lot of people here, I'm sure they've had massive loss of property and business, both to business and individuals. So I wanted to just ask you, do you see a differentiation in the way these Islamic financial institutions would handle the situation? Such kinds of distress situations of their clients in comparison with conventional finance. So
I have a lot of stories.
Okay.
We were discussing with a bank one of their portfolios. So that portfolio is under construction finance or private property. Right? So let's say you have a plot of land and you want to construct a building or building. So a bank looks at your profile, approves, let's say, 2 million dirhams, for the whole finance. Now, if you go to conventional, the moment it is disbursed, they say disbursed, right? And in conventional bank, they say disbursed. So let's say they start disbursing 100,000, they start accruing interest. And they start demanding interest. Yes or no?
Yeah.
You come to Islamic bank. Let's say they use for property finance leasing structure. This is, by the way, a live case. So now we face with situation now that a bank has financed about 250 customers in their book now, remaining, where the contractor has defaulted. What does it mean? That they have to make the villa in 6 months, 8 months. But it's been 3 years they have not delivered the villa. Right? What does Islamic Bank do in this case? Leasing means what? Leasing means you should have you will be saying legal use of property, the right to use.
Yes.
You cannot have a lease without the right to use. So because Islamic Bank did leasing with them, until the property is ready, can they demand the payment? They cannot demand. So as an Islamic bank, they're saying no problem. We understand. We are with you on this risk. This is a life example. If old timers of Dubai are here, you have noticed that address hotel fire 5-6 years back.
New Year Day.
New Year Day. We were working with a client and they had financed the Islamic Bank about 25 or 30 apartments in address. The moment the building caught fire, Islamic banks were required to stop their rental payments, lease payments. Why? Because they are owner of the property. It's a leasing structure. Conventional bank, because it's a loan for them. Your property is only mortgage for them. Although we use the term intermittently, because we are familiar with mortgage means property. Mortgage does not mean property. Mortgage means rahan, as a pledge. Similarly, it depends on what mode of structure of finance you use with a business. So if you are giving a business finance on, let's say, a partnership basis, so you will find the terms of the contract aligned in a way where you feel that, Islamic Bank is a participant with you. However, they are business. They are answerable to the depositor. Yes or no? So this side is depositor and this side is customer. So as an intermediary, an Islamic bank has to balance between both. So you come and say, oh, I faced a loss in business, they will take it with a pinch of salt. They'll say, you're lying. Please prove to me that you are actually suffering a loss. Because they have to manage the interest of the depositors as well. So they are sort of in a precarious position, balancing. So Islamic Bank should be looked at from that prism, from that angle, in how they are. Another important aspect of Islamic banking, it's a byproduct, I would say. When Islamic banking started, the shareholders, they said, when we earn money, profit, we want the bank to give zakat on our behalf. You will not believe a bank like, it's published by the way, go and see the financial statement of Emirates Islamic Bank, Dubai Islamic Bank, Shah Islamic Bank. A bank like DIB pays approximately 500 million dirhams of zakat a year from the shareholder side. Where does it go? It goes to charities. The income that they collect, because when you default in your payment, there should be some deterrence, right? Because you don't charge penal interest as Islamic banks. So you will be, if you are smart, you will say, oh, I will not pay them. So central bank and the Sharia scholars said, to protect the depositor interest, because this side, we have to pay their money, right? So to the customers, we charge what we call as a late payment donation. But that does not go to Islamic bank's P&L. So if you look at big banks' balance sheets, like Islamic bank's balance sheet, you will see, in a few millions. Although you guys may feel that they're suffering, I'm paying 100 if I miss an installment. It's not going to the P&L of the bank. It's not going to the depositors. It's only a deterrence for you. So in that way, it has developed, you can say, mechanics and mechanisms to sort of balance out the responsibility and also make sure that the principles-based approach is there. So what are the principles? Like initially we mentioned the Sharia, right? So those Sharia principles, they actually drive the whole, you can say, the idea of Islam.
Now that's nicely put in, the word balance. One side you have the depositors, so you need to kind of keep them happy at the same time maintaining some kind of social responsibility. Thank you, Ammar, for that thoughts on it. So last 2-3 questions, and then we will open the floor for the audience. Areeba Khan, that's the question for you is again on social responsibility. How do you think we can leverage Islamic banking to serve the less privileged? So if you have some use cases like what Mr. Ammar mentioned from an investing perspective or any other example?
So I won't talk regarding Islamic banks because he's there.
Yeah.
So I will talk regarding Islamic financial institutes. So there are two things which definitely we would like to see Islamic financial institutes doing. Number one is investing in those projects which are serving the less privileged. Like for example, providing housing. Then second is educational initiatives. And I've seen these kind of initiatives being taken up. I have actually worked with ETHIS, Malaysian entity for crowdfunding. So one of the subsidiary is Global Sadaqah. So I was also responsible for like reading out the campaigns, checking whether they are Sharia compliant or not. So few of the campaigns were to serve the less privileged. It was not just for zakat, it was serving for the less privileged, like providing housing, even monetary benefits or some monetary support to the less privileged. So these kind of initiatives, we need more of them, not just one or two platforms doing it. Because we know Launchwood also. Launchwood also is doing a similar thing. So they do also have like campaigns going on wherein they serve the less privileged. The second thing, as Ammar mentioned, the zakat. It's not just the responsibility of the Islamic banks, but also responsibility on Islamic financial institutes also. Like Islamic fintech startups, we have to give zakat, we have to make sure we're giving out to the less privileged. So these are the two things which I believe are very important for the social development also.
So on that context, I just want to ask a parallel question on the housing that you mentioned. In India, I think there is a social stock exchange which is being developed. Are you familiar with that concept of social stock exchange?
No.
No? All right. Okay, so let me not get into that. Last question to you, and I will take a pause and we will open the floor for the audience. Farhaan, what do you think are the opportunities which is available for retail investing in this part of the region? So what kind of growth opportunities do you envisage? That's number one. There are a lot of challenges. On the other side, what are the current challenges that you face as an institution? And how do you think GCC and UAE facilitates a good ecosystem to overcome this?
Thank you for the question. I think on the opportunity side, I think it's massive. Like it's from a business perspective, as you know, like the market is massive. The Muslim population here is ripe. They understand through sessions like this why this is important, what Sharia compliant investing is all about. Which is why we've opened here in the UAE. Surprisingly, actually for me, Wahed was actually the first I think Sharia compliant investment manager, a solely Sharia compliant investment manager in the UAE. So I was quite surprised about that. But I think the opportunity set is massive. And actually our license here with the ADGM in Abu Dhabi gives us the ability to service clients from outside of the UAE as well. So which is actually unique to our UAE offering. So unlike the US, UK, or Malaysia, which are the other countries where we're live, over there we can only deal with local residents, whereas from here we can deal with clients from across the GCC, from Singapore, Pakistan, India, etc. It is very, very, very broad. From a challenges perspective, I think, let's say from a business perspective, there's always going to be challenges of starting up, people. Trust is a big one, especially I think in any kind of in the investing world, whether it's Islamic or conventional. When you're asking people to manage their hard-earned money, obviously there's an element of trust involved. Accountability is my money going to be there at the end of the day? And even though Wahed now Hamza has been around for quite a number of years and is in several countries, it's the first time we set foot here locally in the UAE. So that building of trust only happens with time, and with positive experiences, word of mouth, good reviews, etc. So I think for us that's a challenge which we inshallah overcome over time.
Do you expect even non-Muslims to come and use this platform? So if you were to pitch this Sharia compliance, not as Sharia compliant, but more like a principle-based investing. How are you going to pitch it primarily to a secular investor, where riba and these things doesn't matter? What is that attractive aspect that you would highlight?
I think we have a huge base of non-Muslim clients as well, and I think it's people appeal with the message. Our marketing is very exclusively for Muslims on purpose, because we're typically, like Areeba was saying earlier, an underserviced market. But with that being said, when people actually look into what the offering itself is, people understand. They don't want to invest in arms manufacturers, in gambling companies, etc. So a lot of non-Muslims resonate with the message as well. And actually, when I was in the UK, we launched a branch in the UK, so for clients to actually just come in, walk off the street, ask us questions. And plastered across the window in the branch were a slogan, or one of the taglines was the future of Muslim money. And we used to have non-Muslim, we had one non-Muslim, just coming to the branch really angry, and he was like, why are you saying it's for the future of Muslim money? I want to use this product, market to me. I had to explain to him, yes, you can still use it, but what I explained to you here, Muslims were an underserved market. That's why the marketing is very exclusively for Muslims. But to your question, yes, it's open for everybody.
Okay. So just to sum up what we get, which is now easy for all people around. If you also believe that you don't want to invest in certain industries, then yes, everything is at the tip of your fingertips. I mean, it's at your fingertips. We have platforms which is quite pocket friendly, which is quite user friendly. So no longer can we say that we don't have investing opportunities. So that's interesting. We also found that there are opportunities if you are a venture capitalist, you are a startup, you're looking for funds. There are platforms which is kind of bridging you to a group of investors. And an example was in fact pointed out from Wahed Invest. On financial inclusion, what I understand is resonating with what Mr. Ammar said. They say that Islamic financial institutions are there to help businesses, and I think that's the key takeaway and that we need to take from here. They are there to help you to do their business. But help does not mean that it's at the expense of a depositor. So a kind of a balance is beautifully put in. Less privileged, Areeba Khan nicely put in that there are. And that's something which is nice to know. There are platforms, there are organizations where you can be part of, where you can serve the community with making some kind of minimal kind of returns. So it's not just charity, but making money with a purpose is in fact possible. That's in fact a beautiful point. And the last, Farhaan ends it with a very positive note. He says, opportunities are massive. Let's not call it Islamic finance. When we teach this in universities, we call it alternative finance. It's just another form of finance driven by a set of principle-based. Immense opportunities. Interestingly, more and more secular investors are actually getting onto this platform, not just platform taking these sources of finance. So we look forward to seeing Islamic finance, which is today a $4.5 trillion industry. What's interesting, it's a very young industry as against conventional banking, which is I think about $185 trillion. So which means less than 2.5% is all what Islamic finance is all about today. But what's interesting is the growth numbers. Last year, the year-on-year growth as per Islamic Financing Report stands at 11%. So let's wait and watch to see where this alternative investment takes us to. With that in mind, we kind of close the panel. I still have a lot of questions, but I would like you to go ahead and ask your queries to the panelists.
Thank you all panelists. It was a really very enriching and informative session. My question is to Ammar. Actually, what I understand or believe is that Islam prohibits interest because of its bad impact on the society, because it financially destroys sometimes the people, because of its compounding impact and all. Yeah, for Islamic Finance profit, I was wondering how it is different from the conventional bank. I understand that you are not doing charity, but how it is differs from the conventional bank. Okay, for example, when I go to Islamic bank for a loan, maybe to pay my son's educational fee or something, or credit card loan, what I see is, the profit rate is in fact more than the conventional bank interest rate.
Academic perspective on how and why interest is prohibited. So, I think interest is prohibited, if you ask me, because it doesn't make sense. Why it doesn't make sense? Because when I lend you money and you keep it in your pocket, after probably 1 year, I want you to pay me more than what I lent you. Will the money grow in your pocket? It will not grow. So, more than it having harmful effects, the nature of interest itself, what it does. Because some people make this argument that probably lending with interest to a person versus lending with interest to a corporate is different. There are a lot of academic arguments around that. But the simple premise is because of the very nature of, you can say, the conventional concepts of time value of money, cost of capital and all that, we don't recognize that. Money is either to be invested or traded, or used in trade. Now, coming to a question specifically, apparently when you want to buy a car and go to, let's say, Emirates NBD versus Emirates Islamic Bank, you will buy the same car. Probably if you are paying on time, you will have the same financial impact. Your bank statement will reflect the same EMI. Right? However, the test for this is, what is your contractual obligation that you have signed with the customer?
So you explained on a personal loan context.
Very good. So personal finance is cash finance, right? So now, when Islamic Bank started, they never did personal finance. So when you go to Islamic Bank, probably 9 years back, they said, sorry, we cannot give you cash. Then they came up with a structure. What was the structure? They said, okay, we cannot give you finance, but we can sell you something. So initially what they did, they said, we will buy some shares.
Okay.
Now,